You're right. We have steel companies, but we also have manufacturing companies,
Right.
and we're dependent on trade, of course, with Canada, especially, and the auto industry. So it's basically mixed. A lot of the firms have said that they are concerned about the tariffs, and then when you probe them a little bit further, have they taken action? And most of them say if they've done anything, it's maybe postponed a decision, but they haven't really done anything in reaction to the tariffs yet. So again, this is something we're monitoring, but I haven't seen it come up strongly in the data yet. We did do a survey, and about a third of our firms that we survey said there's been some acknowledgement in their firm that the tariffs could be a negative for them, and they said a quarter of their customers have reacted to it.
You talked about risks earlier. One thing that a lot of people have mentioned are corporate debts, that the amount is large and the spreads are low, meaning that there are people out there reaching for yield, and that's a potential flashpoint with higher rates. When they get higher, that there are potential defaults. Do you see corporate debts as a potential Achilles heel for the economy?
Yeah, so not overall, but there are companies that are highly leveraged that we are monitoring in terms of that issue, that precise issue, so that they will be affected when interest rates go up, and so that's something we're monitoring as a risk. But so far, I would say generally not a big risk, but something we're monitoring.
I got the wrap. It's cold, but I do have to ask you this question. Jim Bullard sat in this seat about an hour.
Okay.
And he said, as far as he could remember, this was the easiest, mellowest August for the Fed that he can remember in a number of years. He didn't use those terms, but do you agree with that?
So this is interesting. So I've been coming here for over 15 years, and I would say that, you know, with the economy growing above trend, with the unemployment rate very low, and with inflation at 2%, it's pretty clear, a very compelling case on what the Fed has to do. So in that sense, I agree with him.